What is up, everybody? Welcome back to the live stream. So glad that you could be here and join us. And today's topic, oh my goodness, the timing couldn't be better. We're talking today about price action and four things that you need to know about price action and how to understand it better. And there's really the four things that we're going to be talking about today are these here. We're going to be talking about direction and that price can really only move one of three ways. Then we're going to be talking about velocity, which is how fast price actually moves. We're going to be talking about time frame, zooming in and out. And lastly, we're going to be talking about related price action, things that may influence price action. And we'll wrap things up too with a completely open Q&A now for anybody that's here that's joining us live. And I see that there's already a few people joining us live. So for those of you that are here live, welcome. Let me know where you're from. Go ahead, type into the chat. Let me know where you're from, where you're watching from. That's always very interesting to see and hear. But I'll be answering questions throughout. So just go ahead, type your questions into the chat, and we'll get some answers. All right, we've got Abhishek from India. Awesome. Thanks for joining, man. Awesome to see you here. Yeah, you've been with us a few times now on these. So let's dive in and take a look at the direction of price. So let me share my screen. Share my screen this way over here. And I actually put the screen on the right side over here. So that way I'm not looking off into the corner like I tend to do. So price direction can really only move in one of three ways, right? So what are the three ways that price can move? Price can move up, it can move down, or it can move sideways. And if you happen to be familiar with this guy, Stan Weinstein, in fact, his book is right there behind me. Why don't I grab that real quick? Show it to you. Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. Highly recommend this book. He's the first person that spoke about price action in this way, where there's really only four ways that price can move. It could be either moving up, down, sideways, and then from this move here, you're either looking, is it moving back up or is it likely to move down? So he's talking about it in four different stages. But in reality, you're moving up, down, or sideways. So the way that I like to think about price action when I'm looking at it in this way is to first zoom out, right? The first thing that I want to do when I'm looking at price action is to zoom out and start to look at the different time frames, zooming in and out. So it's very easy to see which way price is going, right? Well, when you're looking at it bar by bar, like this over here, back here from 2013, right? We're looking at a monthly chart. Which way is price going between here and up here? Right? It's very simple, right? Price is moving up. How about when price starts to drift this way over here? Price is moving sideways, right? It's pretty easy to see. And it's not just because you have somebody drawing a line for you on a chart. You could also see based on this little squiggly line here, right? That's a moving average. And we're looking at a monthly chart here. You could look at any time frame that you want, but this is the power of looking at moving averages. Moving averages will help tell you if you're moving up, down, sideways simply by looking at how the it's flattening out over here, right? So back here, you're in a steady uptrend. Then over here, it starts to flatten out. So you can use both the moving average and you could also visually see that price is not making any more progress. Price is not making a series of higher highs and higher lows anymore. just gonna check the chat real quick and see here who else is here. David Smith from Miami, Florida. Welcome, David. David is one of our elite members. Welcome to the live stream, David. So when we're still looking at price action, right? So back here, prices moving up, then prices moving sideways, then according to Stan, right? Price could do one of two things from this point. Price could either continue higher or start a downtrend. Well, just so happened that price continued its way higher over here and then flattened out. And depending on your perspective, right? So now we're looking at 2018 over here. Price took a dip. So you might call that over here a downtrend. Or if you're zoomed back out, depending on how the far out you want to go, you might look at this whole thing as sideways over here, back into an uptrend, and then this is your downtrend in February of last year, February and March. And then we're kind of where we're at right now. And today's action, right? So let me just pull up a chart of the daily price action on the S&P for perspective. Right? Like that, this is what price is doing today. So far today, price is down nearly 2% on an index. That's a gnarly day. And it it could be scary for a lot of folks, right? Like it's irregular. Volatility is up. You have volume that's increased, and it might look scary, and many of your positions might be getting hit if you're especially if you're trading U.S. stocks. So the purpose then of zooming out and gaining that perspective is to see like how bad is this really? Like, is price changing direction? Not just here on a daily time frame, right? Because you'll have these dips on the daily time frame, and but when you're zoomed out and you're looking at a monthly chart, like it could be barely a blip, right? Like so, this whole trend over here on the monthly time frame has really been in an uptrend or a pretty clear uptrend since April, right? Like since April, it's been just trending higher on the monthly time frame. Now let's take a look at the daily. Go back to April, right? April, you had to deal with all this mess in here, right? Lots of sideways action in there. Then it started to rally, pulled back hard. Then it rallied again, pulled back hard, then rallied. And so you had some pretty nasty periods in that much broader uptrend. So when you are determining what type of trend you're looking at, whether it's an uptrend, whether it's a downtrend, whether it's sideways or whatever, one of the things that you need to do, or that I recommend doing it, and this has worked now for 2 decades since I've been doing it, is no, I've been doing this for 1 decade. I've been trading for 2 decades. Um, but what this helps you do is it helps you gain perspective. It helps you keep that longer term trend in mind. And it helps you stay calm and not get shaken out inappropriately. Now, a question that you might have is, well, is this a time to be selling? Right? Like if I'm holding stock right now, should I be selling? Should I be worried? Uh, the answer is going to depend a lot on your perspective, right? Like, well, or what's your goal? Are you a day trader? Are you a short-term swing trader? Are you intermediate term? Are you a longer-term investor? And also, what are the individual positions that you're holding? Well, what are they doing? right? Like, let's say, for example, you're like Adam. Adam is one of our elite members, and he posted about this trade today. That this was one of the trades that was given. Actually, I believe this was given last week. Well, we've been tracking SFBS for a little while, and yeah, it actually triggered on the 22nd. So yeah, if you're holding a stock like SFBS, Service First Bank shares, and it's up on the day or it's holding up, right? Like actually, right now it's down minus 0.15% on the day, and the major indexes are down about 2%, right? Like we were looking at the S&P. S&P is down over 2% right now. If you're looking at um, some of the other major indexes. What's the S&P doing, or the Nasdaq, I should say? The Nasdaq's down almost 3%. The Russell is down close to 2%. The New York Stock Exchange is down close to 2%. The Dow is down similar, almost 2%. So if you've got a stock like this that is bucking the trend, then maybe you want to hold it, right? It all depends on what your objective is. And this is one of the conversations that Adam and I were having in our private chat room. So part of the elite memberships is that everybody gets access to this private group chat on Discord. And so he was asking me, like, well, Mike, what would you do with this trade here? So part of it has to do with your own personal objective, right? So if your objective is intermediate term and you want to hold this thing until it breaks, then you might want to have a looser stop. And so one of the places that it might make sense to place a stop, a backstop, is back here, right? So that is below Friday's low. And the reason why that might be good for a short term, intermediate term stop placement is because it's allowing for both this shorter term moving average, that's the 5 EMA, and it's also allowing for this slightly longer, but still shorter term 10 EMA to be tested. The purpose of these moving averages is to help you, it's to help quantify the trade, just like how we saw back here when we were looking at the monthly time frames of the S&P, right? The that This moving average here happens to be a 12-month moving average. It's quantifying the move. So back here, you're in an uptrend, then it flattens out, so you know you're moving sideways. Then it's moving back up. You're back into an uptrend. So over here, and let's say that you are a swing trader. Let's say that you're a momentum based swing trader and you're looking at this trade and you're like, Mike, what do I do? Well, you might want to hold on to, if you're looking at the moving averages, eh, which way are the moving averages going, right? Well, the 5 is pointed up right now and it's continuing to accelerate. Same thing with the 10. So if your goal is to stay with the trend so long as the trend is working, then you might want to place your stop down here, right? So that way, let's say price tomorrow falls down over here. Oh, and it's testing the 5 and you want to allow it to test the 5. Okay, that might be perfectly fine. But if price starts to fall even more and come back down here, then you might want to call it quits, because if your goal, like if you're defining your style as short-term, momentum based, right? So kind of moving through some of the stuff here. So talking about velocity now, right? So if price slams down tomorrow and it's testing not just today's low, it's testing Monday's low, it's testing the 5 EMA. By then, the 10 EMA would have caught up, and it's breaking down all these different things, right? It's kind of like baseball. How many strikes do you want to get? You want to give it like try to have 3 strikes, like that. That's a good rule of thumb. 3 strikes. So taking out yesterday's low, that low, this low over here. Okay, call it quits if that's your goal. Let's say your goal is you want to play it out for a longer term move, right? Then that changes your strategy. Maybe you are allowing it to go and test the 21 EMA. There's all different ways to play this game. It's a matter of figuring out which one, like what's your objective, right? We want to be as super clear on our objectives as we can be, because the way that I think of it is kind of like a GPS in a car, right? Like the clearer we are with the address that we put into that GPS, then the machine, the GPS, is going to reverse engineer how to get us to that destination. So the clearer we are with our goal for this trade, the easier it'll be for us to figure out, well, what's the next right move to make. So that's what I would do. Um, Also, one of the things to we were helping Adam with was that whenever you have a multiple of the amount that you've risked, like you're starting to scale out. So he took a little bit off over here on this day. He also took a little bit off over here on that day. So he's already scaled out twice on this trade. It's important to have mechanisms to lock down profits. So, being that he already sold twice into strength, then it's a matter of figuring out, well, if I keep my stop down here, and let's say he wanted to exit the trade at, I believe his main target was 84. If he's keeping his stop loss down here at break even, then he's risking more to be rewarded with less. We always want to we want to maintain the reward to risk ratio, right? So over here, this is the reward to risk ratio. If it's under one, like that, that's not a good thing. That means that we need to raise our stop. So in this case, if he's targeting 84, he would need to raise his stop to at least this level down here below the low of day of September 24th at 76.40. So anyway, I'm getting off topic here. So we spoke about direction, that price can only move one of three ways. We started to speak about velocity when we were talking about, well, what happens if price slams down versus it's just kind of like grinding its way, right? So, well, which way is price moving? Price could also do it the other way too, right? So it's not always a move against us. What happens if all of a sudden, let's say tomorrow, that Adam's still in this, and then all of a sudden price runs up to 80? Should he still continue to just simply trail it with the moving averages? Or is it time to start raising your stops up even more? Right? Well, what do you think? What do you think? Go ahead, type into the chat. Well, what do you think the appropriate answer is? What would you do? What would you do if you were in this situation where you're in a winning trade and price is moving in your favor and it has a lot of velocity on the day? What would you do? Type it into the chat. I find it very good to think through these different scenarios ahead of time. Um, and it doesn't have to be super far in advance too. It could be like a day ahead. So you could be thinking about these things. Krishna says that he would trail, and that's a great answer. Um, you might but it's always good to come up with what your answer is going to be ahead of time versus in the moment. It could be you're thinking about it the night before. You might be thinking of it in the pre-market, like, well, what happens if price just runs up, and then actually take the time to physically write it out, right? Like if price runs up like this, and it all of a sudden it's extended, I'm going to do X, right? And then X, now whatever the fill in the blank part is going to be based on your broader objective. So you might sell something, right? Like you might scale out just a little bit. Maybe you're selling the whole thing. Maybe you're tightening up your stop to the low of day or somewhere on the intraday time frame. Right? Like if we're looking at this on an intraday time frame. Oops. Maybe you're raising your stop somewhere over here if price moves sideways and then ran up here, right? Then maybe it makes sense to place a stop in this neighborhood. Yeah, booking partials is perfectly all right. Something that I like to do quite a bit as well. I love to scale out into strength. Something else that we haven't touched on yet is related price action, things that might influence the price action of the market or of the stock that we're in. I'll use the market as an example. When I'm analyzing the overall market, like you see like a bunch of little you see a bunch of screens over here, right? So you have the SM. So I like to look at the S&P, Nasdaq, Russell 2000, New York Stock Exchange, and the Dow when I'm looking at the overall picture of the market. And I've also got this over here too, which is uh, the IBD 50 ETF, FFTY. Many of the stocks that I like to trade tend to be reflective of this ETF here. So, um, why do I bring this up? The reason why is because all these different indexes tend to influence one another. So, for example, if you have the Russell, which was moving sideways really since March, it would be very difficult for the S&P 500 to have a smooth move all the way up. And it would be difficult for the Nasdaq and the other ones to have these smooth moves like what we were seeing back here for most of last year, right? Like where price just kept on trending higher, trending higher. All of the indexes were doing the same thing back then. So having an understanding of how the different indexes behave and how they influence one another can help you better not predict but to anticipate, right? We're never really, or at least I'm not looking to predict anything, right? My crystal ball is has been in the shop for a very long time now and it's not coming out anytime soon. uh, but the idea then is to start to think through, well, what are the likely scenarios, right? If we were playing poker and let's say you're somebody that's able to count cards, you have an idea of what the chances of a certain card coming out are. And that's the idea with looking at the different indexes together. It's part of the idea of seeing another thing that I do too is I'll look at what stocks are currently setting up and in what ways. Let me zoom out over here. This is a list of the different stocks that were setting up for the weekend. Most of them, yeah, HRI ran pretty hard, but for the most part, um, yeah, here's a trade CRL that I took last week, and this is actually a really great example. I'm glad that it happened to come up. So this is one where I ended up taking a trade on the 22nd. It broke out. It hit my first scale out, right? So earlier I spoke a little bit about scaling out into strength. So once I make a multiple of whatever I risked, I like to take a bit off the table. And in this instance, I took a third off. And I ended up raising my stop to break even to protect my the rest of my capital, and ended up being a good move because we see what CRL did um, yesterday and today. So I got to lock in a third of my gains over here. Yeah, so that's really the four things that you could do well with price action, or four ways to start thinking about understanding price action a little bit better. Again, we spoke about direction, that price could only move one of three ways, really: up, down, or sideways. We also spoke about velocity, right? Like when we're looking at a move like this, in CRL, for example, how it was moving up kind of steadily like this, and then all of a sudden it got slammed down hard back here on the 13th. Then it's moving sideways, relatively quiet. Then it breaks out, and then the past 2 days it got slammed down hard as well. So understanding how volatility might pick up in price, and yeah, to understand that this is what happens in the market. And when we just have an awareness of the types of things that are happening in the market, we can plan for it, right? Like just have a plan of what we're going to do if price does X. For me on this trade, it was okay. I made one times my risk. I'm taking something off, and I'm moving my stop up to break even. And these are all plans that I'm sharing uh, in the elite membership. Like I'm sharing them ahead of time with people. Looks like another comment or question came in. From Krishna. Krishna says, "What indicators are you using?" So on this chart, I'm using a series of moving averages. So we have the 5 EMA, the 10 EMA, the 21 EMA, the 50 EMA. This is the 100 EMA. And let me move back over here, and it's like all the way off the screen, but down here is the 200 SMA. So I'm using a series of moving averages, and this down here is the relative strength line versus the S&P 500. Now, the reason why that's important to me is because I want to trade stocks that are leading the market higher. And the one of the best proxies for the market is the S&P 500. So if this line is moving up and to the right, then that's one sign that it's a leading stock. Now, if this line here is also outpacing the price action, which it was over here, right? Like so, right there, the day that I bought it, it's subtle if you're looking at it, but that line is actually moving into new high ground ahead of price. So that's another sign that at that time it was a leader, and that's one of the things that attracted me to it. And then after you get into the trade and find the reasons why you want to enter a trade, then it comes back to how are you going to manage that trade. And so in this case, selling into strength, raising stops, locking in gains, protecting capital. Excellent question. Yeah, so we spoke about velocity, we spoke about time frames, zooming in and out. We were looking at daily time frames, we were looking at monthly time frames. I look at, so when I'm analyzing the major indexes, I'm looking at uh, monthly time frames, weekly time frames, and daily time frames in that order. I like to start from zoomed out, the 10,000 foot view, and then dive down into the lower time frames. On a stock, I like to have four time frames opened up. I like to look at monthly time frames, weekly time frames. Yeah, let me pull up a cleaner chart. Yeah, so yeah, most of these are going to be marked up. Yeah, Yeti might be cleaner. Yeah, so I'm looking at monthly timeframes, weekly timeframes, daily timeframes, and then I'm drilling down into a 30-minute time frame. And the reason why I like the 30-minute time frame is because number one, I'm a swing trader, and so I like to fine tune where I'm going to enter and where I'm going to set my stops. It's a little bit more aggressive, but the 30-minute time frame is the first intraday time frame that breaks evenly into the trading day, because there's 7.5 hours in a trading day, or is it six? Question from Francisco: do you mostly scalp these trades or swing them on momentum? I consider myself a momentum-based swing trader. I very rarely day trade. I used to day trade. I've given up recently. Well, not too recently, like within the past, like maybe a year and a half or so. And the reason why has nothing to do with performance. I was actually performing very well with day trading. The reason why I opted to switch was because I found that day trading required a lot of my focus, and I wanted to do more coaching, more. I've got a book coming out next year. I just spoke about that on my Instagram stories. Book deal with Wiley Publishing. So I like doing these kind of speaking gigs, coaching, all these things, and day trading required too much of my time, energy, focus. So it's really a matter of figuring out what is the right strategy that fits you, right? Uh, I've spoken about this in other videos too, but I'll mention it again here. Like, if you want to trade, like, you need to have three things, right? So the three things are that your trading needs to line up with your goals, right? Well, whatever your goal is, it needs to help you achieve that goal. Then it needs to line up with your beliefs, because if your trading system doesn't match up with your belief system, it's kind of like trying to run um, like a Windows only program on a Mac. Like, it's just not going to work. And it also, right? So it needs to line up with your goals, your objectives, and the third thing is your ability to execute. If you're not able to execute the system, then it's no good to you. So there's those four things there. All right. And that is about it for uh, the price action and which way things can move. We'll open it up to a little bit of Q&A, but it looks like, well, we're already at the 2:30 mark. Trying to keep these live sessions to about half an hour. But I'm glad to take any questions that you guys have if you want to type them in. Now I'll give you a moment or two to type in any questions that you got. Also, let me know where you're watching this from too. We're streaming it to YouTube, we're streaming it to Facebook, and we're streaming it to Twitter. Found out how to do each of those things. So first time that we're streaming to all those different platforms. So yeah, let me know where you're watching from, or yeah, later on too, we're going to take these, turn it into a podcast, and distribute it in other ways as well. So doesn't look like there's any questions left. So we'll wrap things up here. I want to say thank you so much for tuning in. Well, we actually have another one coming up tomorrow, another one of these. Let me see what time we're doing it tomorrow. I'm testing different times. I'm planning to do more of these YouTube lives. So tomorrow's live is going to be at 11 a.m. and tomorrow's 11 a.m. Eastern time. So tomorrow is going to be about position sizing. So if you're able to make it, hope to see you there. And I hope that you have a great rest of your week if I don't see you there. All right, everybody, take care. Much love. Peace out.